The Genius Act of 2025, formerly known as the Guiding and Establishing National Innovation for U.S. Stablecoins Act, represents a landmark bipartisan effort to create the first comprehensive federal framework for regulating payment stablecoins in the United States. This legislation seeks to balance three critical priorities: protecting consumers, maintaining financial stability, and fostering continued innovation in the digital asset space. The bill has five main objectives that drive its comprehensive approach. First, it aims to safeguard stablecoin holders through strict reserve requirements and mandatory transparency measures. Second, it seeks to mitigate systemic risks to the financial system by preventing destabilizing practices like fractional reserves that have led to stablecoin failures in the past. Third, the legislation addresses national security concerns by combating illicit finance through robust anti-money laundering and sanctions enforcement mechanisms. Fourth, it establishes regulatory clarity by creating a unified federal framework to replace the current patchwork of fragmented state-level rules. Finally, the Act aims to strengthen the U.S. dollar's global dominance by fostering trusted, well-regulated stablecoins that are backed by American oversight. The heart of the Genius Act lies in its strict issuer requirements. All stablecoin issuers must maintain one-to-one reserves, meaning for every dollar of stablecoins they issue, they must hold at least $1 in approved assets such as cash, short-term Treasury securities, or similarly liquid investments. The legislation mandates unprecedented transparency, requiring monthly public disclosures of reserve composition and annual audits for large issuers that have more than $50 billion in outstanding stablecoins. Perhaps most importantly for consumers, the bill provides bankruptcy protections, ensuring that stablecoin holders receive first priority for repayment in any insolvency proceedings. The regulatory framework established by the Act creates a dual-track system for oversight. All issuers must obtain federal licensing and register with a primary federal regulator, such as the Office of the Comptroller of the Currency. However, the legislation provides flexibility by allowing smaller issuers with less than $10 billion in outstanding stablecoins to opt for state regulation, while larger operators face mandatory federal oversight. The bill also includes important prohibitions, banning unapproved issuers and risky practices such as algorithmic stablecoins that are not backed by traditional reserves. Compliance and enforcement provisions are robust and far-reaching. All stablecoin issuers must adhere to Bank Secrecy Act rules, including comprehensive customer due diligence and transaction monitoring programs. The legislation establishes significant penalties for violations, with civil penalties reaching up to $100,000 per day, and regulators maintain the authority to revoke licenses for non-compliance. Additionally, issuers must demonstrate they have technical controls in place to freeze or burn tokens when necessary to block illicit transactions. The Act also addresses market structure concerns through several key provisions. Insured depository institutions such as banks and credit unions face lighter regulatory requirements when they issue stablecoins through subsidiaries, recognizing their existing regulatory oversight. Importantly, the legislation explicitly excludes compliant stablecoins from Securities and Exchange Commission and Commodity Futures Trading Commission jurisdiction by classifying them as non-securities, providing crucial regulatory clarity the industry has long sought. From a legislative standpoint, the Genius Act was introduced on February 4, 2025, by a bipartisan group of senators including Bill Hagerty of Tennessee, Kirsten Gillibrand of New York, Tim Scott of South Carolina, and Cynthia Lummis of Wyoming. The bill has moved swiftly through the legislative process, advancing through the Senate Banking Committee in March 2025 with strong bipartisan support. As of May 2025, the legislation awaits a full Senate vote with expectations of continued momentum given its broad political support. However, the Genius Act is not without its critics and concerns. Some opponents argue that the legislation favors large banks and technology firms over smaller players in the market, potentially stifling competition and innovation. Critics also highlight what they see as gaps in oversight, pointing to unresolved risks such as potential conflicts of interest and what some view as inadequate consumer safeguards despite the bill's protections. Despite these criticisms, the Genius Act represents a significant and potentially transformative step toward legitimizing stablecoins while addressing the substantial risks posed by rapid cryptocurrency market growth. If enacted, this legislation could establish the United States as a global leader in digital asset regulation, while providing the regulatory certainty that both consumers and industry participants have been seeking. The bill's passage would mark a new era for stablecoins in America, potentially unlocking innovation while ensuring appropriate safeguards are in place to protect the financial system and American consumers.